Welcome to TaxTron web tutorial video series. In this video we will learn the half-year rule for CCA. Let's start by breaking down what the half-year rule entails and when it applies. What is half-year rule? The half-year rule applies when you acquire rental property. In that year, you can generally claim CCA on only one half of your net additions to a class. This rule, also known as the 50% rule, means half of the maximum CCA amount is allowed in the year of acquisition for new additions, cost, into 50%, into CCA rate, taking the half-year rule into account. To demonstrate how this works, let's walk through preparing a return on TaxTron Web. To begin, log into TaxTron Web and open your existing T2 client. Click on New Return. For this video demonstration, I'm selecting Ontario as the province, and T2 fiscal year information, for example, January 1, 2022, to December 31, 2022. Click on Create. Upon landing on the initial page, select Rental Property and proceed. On the Tax Year Information page, ensure your business number, corporation name, and fiscal year details are accurate. Navigate to General Information on the left navigation bar. Choose the corporation type and fill in essential details regarding the corporation's primary business activity and other product-related information. Moving to the next page, enter the corporation's address. If any changes have occurred since the last year's filing, update this page accordingly. Otherwise, proceed to the next step. Moving forward, click Next to proceed with completing the income statement. Since I'm managing a rental business, I'll input the real estate rental revenue as $56,000. On the next screen, report various expenses: $2,400 for interest on mortgages, $340 for electricity, $1,000 for water, $298 for heat, $1,200 for repair and maintenance, and $2,465 for property tax. This calculation reveals our net income, which stands at $48,297. Next, proceed to fill out the balance sheet. Under the Assets section, I'll input $34,000 for cash and deposits. Click Next, and you'll arrive at the Liabilities page. Here, under Equity, I'm reporting $100 for common shares. Upon clicking Next, if you notice that our balance sheet remains unbalanced, it's time to address claiming CCA. To initiate this process, navigate to the left side of the screen, access Schedules, and expand the Capital Cost Allowance section. Click on Let's Work on Assets and respond affirmatively to the question, do you have assets on which capital cost allowance, depreciation, can be claimed? For this demonstration, I'll select Class 1 since it's the initial year of reporting this asset. To proceed, I need to confirm that there are additions or adjustments to this CCA class by selecting Yes. Given the purchase of the building for $98,000, I'll report this amount under Cost of Property subject to half-year rule. Now, let's ensure that the corresponding information for depreciable assets is accurately reflected on our financial statement. Return to the expense statement and select the Jiffy code 8570 for amortization of intangible assets. Report the depreciation claimed, which in this case is $5,880. Next, navigate to the Assets section and locate the Jiffy code 1680 for buildings under depreciable assets. Here, input the total amount for which the building was purchased. In the following column, enter the accumulated amortization. However, despite these updates, upon rechecking the balance sheet, it remains unbalanced, with our assets exceeding the sum of liabilities and shareholders' equity. To rectify this, let's revisit the Liabilities section and input an amount of $83,603 for due to shareholder. Upon completing this adjustment, our balance sheet should now be balanced. With our financial entries corrected, we're all set to verify the calculation for the half-year rule. Let's print our record-keeping documents and proceed to Schedule 8. Here, we can confirm that the half-year rule has been applied, and we see that we have an available UCC, undepreciated capital cost, of $92,120 at the year-end, ready to be carried forward to future years. That concludes our walkthrough of the half-year rule for CCA. We hope this was helpful for you. Stay tuned for more insightful tutorials in our next video. Thank you for watching.